What's up, everybody? I am going to do my month in review for July 2024. This is where I do a deep dive into my metrics for the month. I go over my overall statistics, my win rate, losing statistics. I do tag breakdowns, long versus short reports. I even do reviews of my sleep metrics. And how I'm just living my routine, as well as go into a deep dive of each one of my strategies, which is currently the gap, give, and go, back to open, Rubberband, VWAP continuation, second chance, opening range break, and 9 EMA pullback. So let's dive into it. So I'm not going to go over the too long didn't read yet, but you can feel free to read this. So for my overview this month, the very first thing is I took 1.5 weeks off of trading for vacation, visiting family over the July 4th week. And so, yeah, I just wasn't trading, which is the first time I haven't been trading in a little while. So let me just talk about this for a little while. So I struggle when I don't trade because I like trading. And so watching, I have this FOMO that I'm always dealing with. Even when I'm trading, this is one of my weak points is dealing with FOMO, which is why I grade myself on selectivity. Selectivity is my primary focus, and that just helps me cut down on some of my FOMO, only taking the very best of setups. And so I would say the first few days of not trading were fine because there was literally nothing going on. It was kind of boring. It's July 4th week, so I figured it's going to be okay. There's not going to be a lot of action. But then Tesla just started ripping. And I there are a lot of good trade opportunities when Tesla started ripping, and so I definitely started feeling some of that FOMO, some of that impatience that I wish I were able to trade while I was on vacation. And so I think there's a couple of things that I can learn from this. The first thing being that I felt like the first few days there was nothing going on, and so there's no reason to trade. I think you can learn a lot from that, which is you don't have to trade every day, right? There's often times where there's not really, even B setups. So you don't need to even take a trade. And you can just trade the best setup. So whenever Tesla's, ripping, and let's say you're on let's say you have this mentality of I'm on vacation, I'm not going to trade unless something is very enticing. And something like Tesla happens, and you're like, okay, I'm going to leave my vacation in order to trade this. Maybe those are the only times that you should be trading. And so just sort of, instilling the selectivity mindset that I've been working on, I feel like this time off made me sort of reflect on this is when I should be trading. This is when I should be putting on risk. So I felt like this time off helped me reflect on that. And so it was very healthy for me. The second point, second change this month is that I stopped using trade ideas. I had built out a Rubberband scanner that I was using for about a month, and it was pretty decent. It was pretty expensive though. I probably will go back to it eventually. But as of right now, I just feel like I don't know. There's so many false positives and stuff, and then I'm like chasing rubber bands and things like that. So I feel like I should just wait for rubber bands to come to me. During the trade ideas, I think I was like break even on rubber bands. I took like 20 of them. So this was in the month of June. So yeah, I just feel like not having the scanner, not feeling like I need to chase every rubber band that pops up on a scanner was good for me. And instead, I'm using the We're Trading Reversal Scanner. So I still do get a lot of those reversals. And that's just something I've already paid for. So there's not a monthly fee for me at the moment. Of course, I'm going to have to reevaluate all this at the end of the year. The other thing I decided to do is I bumped my VWAP continuation risk from 10 to 20% in July 17th. So this was like halfway through the month. and I'll do a deep dive into the reasons why and how that impacted my stats. And then I also bumped the back through open risk from 5 to 10% on July 23rd, whenever earnings season started. And I just feel like back through open and gap give and go are much more prevalent and resolve very nicely during earnings season, whereas maybe not so much during non-earning seasons. So yeah, just an increase there, and that's something I look to do every earnings season, and then decrease risk again on the back through open during non-earning seasons. So this is my overall statistics for the month. You see that I had a $503 gain, and so this was my very best. So this is this is a daily stop for me, and I've never been able to make a daily stop. So this is my first time ever to make a daily stop since I've been using this daily stop system. And yeah, my metrics are all very good here. This is the best month I've ever had, and so we'll just dive into it. This is what my calendar looks like for this month, and you see that I had every week green, and I was able to actually do that last month as well, is every single week was green, and that was the first time that had happened. And I feel like that's where you build out that consistency, right? Is probably every week, hopefully you can get green weeks. You have 5 trading days, so hopefully you can turn those green, and then if you have every week green, you're gonna have a green month. And so one of the things that I'm trying to focus on is my selectivity is really working on, and I should really throw my average trades out here, but yeah, my average trades are small, right? You had so many days where I only took 2 trades, and so just selectivity being a key focus. And Justin, I've heard Justin and Bella at S&B Capital, they say that like if they have 2 red days consecutively, then they're not reading the markets properly. And for me, I have many 2 days. Like I never don't have 2 red days consecutive. All right, and that's the big difference between a profitable trader and an unprofitable trader. And so I think just if you only take setups that you've put thousands of hours of working on, and you make sure that your entry criteria meets the thousands of hours you've spent on building up your setups, then you should be consistent. Because if you're not, then that almost means that your strategy is not really working anymore, and that you need to reevaluate that strategy rather than just looking internally in terms of how selective you're being. So this is my gross daily P&L for 30 days. You can see I had a lot of base hits here. I had one big winner at just over 150. And then I had one loss at 150 as well. So I really don't like to see losers that big. I would like to see, my biggest gain is larger than my biggest loss by almost a 2-to-1 ratio. So I want to look to definitely tighten that up, maybe this month. But it's something I definitely want to keep my eye on. I should be able to get involved in, 1 or 2 like almost home run hits, and then everything else is just base hits. So that's my goal, is not that I'm looking for home runs, but there were a lot of times this month, actually, in July, where I was involved in like this really big move, but unfortunately I wasn't able to capture it. I'm going to go over some of those details, but the fact that I'm in those types of moves before they make them, I have the opportunity to capture those really big home runs. And, I just need to tighten up my system a little bit, look at those trades and see what I can do differently so that next time I will be able to capture those home runs. But I think the first step is just being involved in the first place, which is where I'm at right now. And then eventually I will start capturing some of those really big moves. And that should really help, widen the gap between my largest gain and my largest loss. Gross cumulative P&L So this is what my P&L curve looks like for the month, and I am just so excited about this P&L curve. Like, this is my happiest moment in my trading career so far, probably. Like, this P&L curve is what a good P&L curve looks like. Like, if you were to show me a stock that looks like this, like its trend, and I'm like, well, this is a really strong stock, right? And it's just going higher. And you see there was a couple of breakout, a couple of smaller pullbacks, and then it just has this natural wave of increasing. So subjectively, this looks strong. And the fact that this is what my P&L curve looks like is so good for me. My confidence is increasing. I'm just getting more tighter in my selectivity. And hopefully, I will continue to see this P&L curve move in the same trajectory going forward. This is my win percentage. It's just around 40%, 42.9, so 43%, compared to our last month, which was 41.5. It's about in line. I am trying to do things to increase my win rate, but yeah, it's not horrible, but it's definitely not great. Something I'm working on. And I would also say that this isn't really an area of focus for me. Like I think traders do focus on win percentage, but I think if you're like, you can even have a loss on a trade where you break even at basically. So maybe you have like a really small loss because you're playing good defense, and that will show up as a losing trade. But really, you were in like a really good move, and you just gave it, to break even, and then you went break even and took a small loss on it. And so your metrics is going to show that you have a low winning percentage because of that, which I think is completely unfair. And I think you should be taking those break even, exit for break even trades. And so, yeah, just don't place a lot of focus on win percentage. Rather, I put more focus on things like MFE and MAE, profit factor, things like that. Winning and losing statistics. So these are basically what your winning days look like compared to your losing days. And so maybe you can use this in order to find areas that maybe you're really weak at on your losing days, or maybe something you're really good at during your winning days. And so you see that my win rate on my losing days is only 12%, so really low. So to me, that automatically says, when I am having a losing day, like if I'm going to have a losing day, like I'm just wrong, like immediately. Yeah. Whereas on my losing days, I'm also 87% losing. So yeah, I mean, this just is telling me like I'm just not seeing the market correctly. Whereas on my winning days, I'm at almost 52% winning trades. Then my average winning trade is 53 versus 17, so it's definitely not having big winners. Losing is about the same, so that means I'm keeping my losses consistent, which is really something that's very notable. And let's see, my hold time is, I'm holding very long. Probably some of these VWAP continuations and longer type of rubber bands are what's causing that to be 1 hour. Whereas, I'm not really holding anything if it's not working on losing days. Losses are about the same, which again, consistency on how I take my losses is very important. So that's good. And then on profit factor, you see 2.29, so very good. On the losing days, I'm just nothing. It's nothing. So it's very obvious there. And then largest gain versus gains on my losses. Again, big discrepancy there. And then again, largest loss, they're about the same on winning and losing days. So I really like that I'm consistent on how I manage my losing, or how I manage my losses. So I'm not spiraling out of control. I'm taking losses as per my system. So everything looks fine here. So this is a tag breakdown of all of my tags within TraderView. And so, I just have these sorted by count. So you can see I took more VWAP continuations than anything. And I was basically break even on this. So definitely going to do a deep dive in on this. A big portion of why this is break even is because I did a 50% risk adjustment in the middle of the month. So take a look at that. But then other than that, you see the second chance. I took a decent amount of these, and this was very profitable for me. The ORB tag goes in line with the second chance. So this is a second chance off of the opening range break. And so about half of my my second chance trades were off of the opening range break. And this was profitable, although half of my gains almost came from non-ORBs. So we'll dive into that. I took a lot of bad trades this month. So this is something I definitely want to work on. I need to tighten up my selectivity. I know a lot of these came from, several of these actually came from just when I had overconfidence in, a bias that something was going to go down. So I didn't wait for my setup, and I wasn't selective enough. So we'll go into this, and then rubber bands. I only took 6 of them this month. This used to be my primary, and like I said, I think last month I was at like almost 20 rubber bands. And so I only took 6, very selective on it, and you can see very profitable. So this is my longest running strategy, and so I think it does make sense that I'm most comfortable with the rubber bands, and that I just continue to improve on them, so I can continue to size up on them. So we'll do a deep dive into rubber bands. Then I have a higher time frame breakout tag. So basically, these are any time that I take a trade that also has a higher time frame component built into it. And typically, I manage the higher time frames a little bit differently than I would something that doesn't have a higher time frame. So we'll talk about those. The new strategy for this month is the 9 EMA pullback, and it's something I've been taking on smaller size, and I only took 5 of them, so fairly selective on them, and I did pretty well. And then and I have these like tag versus setup, so I think I don't have enough data to call this a pure setup yet. So this is why this is still a tag, but this will eventually be a setup, and I'll write papers and all sorts of things to formally make it a setup. And then my last one, I have the opening range break, which is a traditional opening range break. Didn't take very many of them, but they were profitable. All right, next up is my long versus short report. So this just compares all of my long trades versus my short trades to see, I don't know if we can find anything here. So immediately you can see that I was much more profitable on the short side, and only slightly profitable going long. And I am a short biased trader. I like shorting more than longs. However, being that I like shorting so much, I definitely feel like I understand when shorts are about to get screwed, and that is when it is a good long. And so I don't feel like as a trader necessarily I have any sort of bias going one way versus the other. And actually last month, I think I lost money shorting overall, but then my longs were like really strong. So I think it depends on the type of market we're in, the type of what's going on right now. I think right now the semis are pulling back and the market is sort of just melting, and so it makes sense that I'm shorting more than I'm going long. So let's see I took the exact same number of trades, which is funny, both the long and the short side. And let's see what else. My winners are about twice. My losers, I did have larger losses as well, about twice as well. On my shorts, hold times, profit factor is significantly better. My gains, my largest gain and losses are about the same as well. I'm sorry, the largest gain on both sides are about the same. Largest loss though is significantly higher on the short side, and I think this one actually has to just do with this VWAP continuation bump. So it kind of skews some of these metrics. This is why I don't like doing bumps in the middle of the month. But it is something that a lot of traders recommend that you do is every 2 weeks or something, as long as you're doing really well, that you consistently make these small bumps. Maybe 20% as opposed to 50%, but I went with 50%. So this is my sleep metrics. You can see I had a pretty consistent sleep, and I actually, the first week of July was when I was on vacation, and so this was, I had a 75 on that week, so I felt like I was able to keep my sleep somewhat consistent, at least from my quality of sleep, and I had an average of 76, and I had 1 week that was an 80. So overall, it was this is good sleep. I'm consistent, and I feel well rested, like I'm getting enough sleep. All right, so this is where I do a deep dive of every single one of my strategies. So let's just dive into this. The first one up is the gap give and go. So I only took one trade here, not a lot of data for us to go off of. All right, so for my winner highlights, again, this is only one trade, so not much details to go off of, but this was a pretty good gap give and go off of AMD. Almost stops me out, but was able to make the break of the pre-market resistance, and just sort of kind of fails. So this was actually the very last day of the month. Next up is the back through open. Again, not really taking this much, and I didn't really take that much risk neither. This is about break even. Not much to say here. This is my winner highlights. So looks like there was a back through open through the pre-market support. This was a pretty decent trade. I think this manages very well. For the loser highlights, it looks like this is just being kind of choppy, and so it put in a 4-bar and then broke down, and then it's able to reclaim it again. But yeah, just very choppy, so not bad here. This was a small loss, but I felt like this was a really good trade, actually. It made those 2 big wicks and then back through open, but it just put in a inverted hammer and failed, so got out on the prior bar breaks for a small loss. It ended up going a little bit lower before ripping higher, and this was on Google's day 1 earnings, so I think this was a very good trade, high probability. It just didn't go in my favor. So in summary, not a lot of back through opens opportunity, and my risk is much lower on them because we're not really in earnings season. But I think I'm taking good trades, and I'm also managing them well, so I'll continue to take these types of trades. Definitely higher risk inside of earnings season. Next up is my rubber band strategy. So this is one of my core strategies. Again, I only took 6 of these trades. I was very selective on them. However, my profit factor was 18.5. Holy shit. That was really good metrics. So my average MFE was 115 as opposed to MAE, which is only 26. So huge discrepancy there. And I think that is just due to me being able to correctly get out of a trade that is going to go against me. So instead of taking a full stop, I'm able to identify areas such as the loss of the backside where something should have gone, but instead it begins to sell off. And so, yeah, I just spent a lot of time working on rubber bands as my single core strategy. So I think all that work is really starting to pay off. Really good trade management, identifying when a trade should go and then get out and capture those profits while I can. And then also giving it room to run if it's continued to be strong. And then identifying areas where it's going to basically I can get out for almost break even. And then that would have given me basically a free shot at the trade. And my win rate was 66%. So very high win rate on this as well. So we'll just dive into the winner highlights for the rubber band strategy. So this one was IWM, which was on a multi-day extension. I know Justin had been talking about this one almost as much as he'd been talking about SMCI whenever SMCI was really ripping. And yeah, so I took this trade. He took it as well. And so he actually called us as part of his pre-market prep, is that he's going to look for a pop up into high of day, 2-day high of day, and then a failure. And so, yeah, it went right up into high day, started putting in some resistance, and then just failed. And so I entered on a 2-bar break, and then it came back into VWAP where I took half as it immediately came into VWAP. Starts to rebid immediately off of VWAP, so I'm just taking half there, and then I have the rest for break even. So I get out of that trade. That was a pretty decent trade for me. And then it rips higher and goes even absolutely bonkers. And this is IWM. This is a Russell 2000, right? So this is a small cap ETF. This is trading like a meme stock or something. That's absolutely, it should not happen. Should not happen. And so this is actually the first trade I took on here. So I took 30%. So this was silver bullet because it gave me exactly what I wanted. But then this became an even better setup than the prior setup. And so I only take this one on, I think this was just 10% as a normal rubber band. And Justin took this on 55%. I don't remember what he took the first one at, but it was like, let's say 20%, and the next one was 55%. This is the difference between a professional trader and me, is that I take, the first one on higher risk. It doesn't really work out. I take the second one, but on significantly lower risk when I should be like quadrupling my level of risk. This should have been a month maker for me, probably was for Justin, but whatever. So I enter in on the 4-bar break on the loss of the 9 EMA, which is just a perfect spot to enter in. And I take it down a little bit past VWAP, and then it just sells. So this is something that maybe I should think about as well, is just giving it, when it starts selling so hard past VWAP, I'm just like, well, I could take the extension through VWAP, but maybe instead of that is I should just have this on like a prior bar break. So I do see that I actually exit on a prior bar break after it touches a key level of resistance. But I think I should have done that on the reach of VWAP as well, because it could bounce and then give me that prior bar break. But instead, I would be able to capture like 4x the move on big size. So I think that's something that I will start to implement as it starts to really break down from VWAP and become extended. Moving on, NVDA was my next big winner. And so this one was, I think, my second largest rubber band move that I have ever captured. These 180 reversals are absolutely ridiculous. So I waited for a multi-bar break after NVIDIA had been getting sold really hard, and it really never looks back. I take half at VWAP, and yeah, I just think again, if I were to, I don't know, this one's so far extended that like I think you have to take it at VWAP. but you do have a significant level of resistance there at the opening range break level. And yeah, but this one just like goes. I had, 5% of my position on for the remainder of the day since it was so strong. It did end up selling, and I closed out, but near the top of this range. So this was a really good entry for me. I know Justin and Jeff and probably the entire S&B desk was involved in this trade as well. This was a very good opportunity. Moving on, this is my last highlight winner. So this is Tesla, and yeah, it was getting sold like so hard. And again, this is after this extension, after it had been deeply overextended, and it just starts melting down. So there's probably a few trades that you can take here off of the opening range break. And but it starts to sell off. Average RSI was 19. You get like this big reversal candle, and yeah, it's very clear in the tape when you see that type of price action. And then it establishes the backside. It breaks through the backside, but then fails. So I get out on the failure of that backside. And again, this is one of the things that I think that is helping me be very consistently profitable on the rubber band strategy, is that I'm identifying an area where it should go and be able to touch VWAP. And when it doesn't, I just take my profits. Justin gave this one a little bit longer, and he actually exited on the second failed breakout of the backside. And I thought this one should really go. And I actually took this one short as a VWAP continuation, I believe. And so I was watching it for a VWAP continuation at this point. This meets every criteria I have for a VWAP continuation. But so I just enter, as it's not able to get over that backside. But then it does rebid from the initial rubber band snap area. So this is something that I'm going to keep an eye on whenever you do have these rubber bands and you have a VWAP continuation. Potentially, I'm not sure if this is just a coincidence or whatever, but it's just something I'm going to keep my eye on. Do they offer an area of support or resistance at the rubber band snap area? In this case, it did, and I just got out as it exited the break of that trend. And this was about a break-even trade for me as well. And it did end up going past VWAP. So this was a very clean and good exit. All right, on to my next trade. This is going to be the F that I took as a rubber band that's going on the opposite side of the news. So it's something that I talk a lot about not doing, and I did take this trade. I don't necessarily think it was a bad trade. Like the entry I thought was pretty decent. This trade, I do remember that the tape was being very aggressive, and it had some of the most buying that I have seen on a ticker in a while. So this was almost more of a tape trade than a traditional rubber band. So I think this entry was okay. Maybe I should, use less risk than the normal amount of, I should definitely use less risk. So it's something I'm working on, is, having different hotkeys for different levels of risk. So I think this was a decent trade, but I was able to manage it where just getting out for the break of the trend. So good trade management, I think, on it. The next biggest loser, SOXL. So this was a really good entry. You see there's a very strong level of consolidation at a prior level of support, which is now turning resistance. And it just breaks through that level of resistance on ever increasing volume. So this was a 8-bar break, so really great entry. Comes back up and does a test of the prior bar, prior support area. So that is also turning resistance. And I just think that I should have managed this the same way. So it kind of puts in like a mini sort of backside and then attempts to break through this level and then fails. And so I think maybe I should just, you know, take some off the table here, because it basically attempts to break through this level and then fails. So that's a sign of weakness, and so you can just take some off the table here. And then just get out where I got out near break even. So this did end up going lower, so I think it was good that I took a small loss on it, but I think that I could have even done it just a little bit better, by Xing as sort of a failed breakout through the backside. So in summary, I think the Rubberband continues to be one of my strongest strategies. It's one of my longest running strategies, and I feel like I have a very good sense of getting out of rubber bands that are going to fail. So just continuing placing emphasis on that trade management, and yeah, I'm going to increase my risk from 15% to 20%. Moving on to VWAP continuation, I have been focusing very heavily on this VWAP continuation for a while now, for the past month and a half, something like that. And in July, I was about halfway through the month, and I was up 9 trades, and I was up, I think, half of a daily stop on this, and so I decided to give myself a risk bump from 10% to 20% on the July 17th. And because I'm taking twice as much risk, it has changed my metrics drastically. It's one of the reasons why I don't like doing risk bumps, especially in the middle of a month. But it is what I think a lot of folks at S&B and Lance recommends, is that you do every 2 weeks or so, you'll do a risk bump. I just don't really know how to measure the metrics properly when you're doing it that way, rather than just increasing like risk bumps at the end of every month after you do these types of analysis. But I did do the risk bump, and so it actually changed my metrics a lot. So you can see this is what my metrics look like before the bump. So it was a 2 profit factor. Gains were 2 times of losses. MFE was 2 times of MAE. So yeah, this was a pretty solid trade strategy, and something I've been working on for a while. And so I gave myself a risk bump, and so these are my metrics after the risk bump. So you can see that, and again, that I can't stress enough. Before I was, I think, risking $50. And so I was up like 3 times that amount, or yeah, 3 times. Whereas this is just $20 is, or sorry, 20% is going to be $100. So basically, I'm down 1 trade on this strategy, the second half. But you can see it wasn't very profitable here. So I'm going to review some of my winners and losers on this. So my first winner highlight is going to be CRWD. This was the day 2 of the CRWD meltdown after they shut down part of the internet. And here I think that my entry was pretty good for this first initial no-touch VWAP continuation, but that I got stopped out as it comes and reclaims and gets over VWAP. So I think this was a very important trade for me, because I actually traded CRWD on day 1, and I traded it very poorly because I had such a strong short bias on it. Because they shut down the internet, I thought for sure it should go down, and so I actually traded it outside of a trading strategy and lost a lot of money on it. So this was day 2, so this is the second day after I fucked up, basically. And then I take a VWAP continuation as per my strategy. This is a very clean entry, and then I get stopped out of this one as well. So I think a lot of traders would be, discouraged from this. You fucked up on day one, and then you get stopped out when you're trading it cleanly. And but I didn't care at all, actually. I think I think one of the, I don't know if this is good or bad, but one of the attributes I have as a trader is I have a pretty short memory, just in general, but for trading as well. And oftentimes I'll have like either a really good day or like a really bad day the day before, and the next day I don't remember, what type of day it was or what even happened. So, I actually, when I was trading this, I wasn't like, revenge or anything. I was just like, well, this is day two, and maybe it'll be trade a little bit cleaner. And so, just taking a loss here, I just took a loss like I would take any other loss. It didn't affect my psychology or mentality or anything like that. And I just kind of stayed with it and saw that, it gets above VWAP and then starts selling. And so I just get short again. And yeah, I just feel like this is a good testament on the type of trader that I am. And yeah, I felt a lot of positive things about that I was able to do this. To basically, kind of get knocked down and make some bad decisions, and then turn around and take a stop, and then trade it really well still. The only thing I think I should have done better on this one is I took these at the same amount of risk. So it was like 20%, 20%, I think. So instead of that, I should have actually been 10% on the first one because it didn't actually touch VWAP, and then 20% on the second one. So this is a change that I ended up making after this trade because of this scenario. So now I do have a 10% and a 20% hotkey based on whatever catalyst or factors that I want to increase or decrease risk on a specific strategy. Moving on, my next best VWAP continuation trade was on Tesla. So this one was kind of crazy. So Tesla had gone up a lot, overextended for the first week of July, pretty much. It had like 8 consecutive green days or something like that. And what was interesting on this day, though, is that the market was completely melting. And that Tesla was holding up strong, or at least trying to hold up. And everything else was melting. So I just took this as a VWAP continuation. And this was actually a really tough hold for me. And it didn't exactly do what I thought it was going to do. It had a sort of a wick above VWAP. And then it held just below VWAP for a pretty long time. And then we got some volume on it, and it really started failing right there. Went low of day, and I think I managed that first part pretty well. And it was able to get back over the 9 EMA on the 2-minute. And I was holding 25% because this is like sort of a higher time frame idea. But the problem, it got over the 9 EMAs, and so I gave it basically, a decent amount of bandwidth, and so I just exit the trade as it, breaks trend and gets back above key level and things like that. And then what happened after that? Shortly, a few minutes after that, there was some breaking news on the robotaxi being delayed, and so it just completely melts on very significant volume. And so this probably could have been a pretty home run trade for me. I know Justin had, first of all, he took this on 55%, so he was at 55% at VWAP, and I'm not sure if he partialed out. I'm sure he did through some of this move, but he's still holding, a decent chunk into this big blow off, sort of a breaking news trade. So this is where I talk about I was in a position in order to capitalize on this really big move. Unfortunately, I just wasn't able to capture it, but I do think that the first phase of being able to capture a big home run trade like this is just being in it to begin with. And then, maybe as my system develops or something, I'll find out ways to, capture home run hits like this. So the next trade is going to be Lucid. So I'm not gonna lie, I completely forgot about this trade, which was funny because this is a very significant trade for me because this is the ticker that I lost a lot of money on as my single worst trade ever, P&L wise. And so this, I remember this being a pretty significant day for me. So I entered on the VWAP continuation as it loses trend, and what I would say about this entry is like one of the rules that I entered later is that if it just goes 2 minutes straight up to VWAP, and then I want to see it have its first pullback. So I would expect there to be some sort of pullback towards the 90 MA or something like that. And this one is actually due as prior support where it rebids off of. So instead of taking all that heat as it rebids, I can just wait for the first pullback to put in and then enter where I actually have the better entry at. Other than that, I think that I managed it really well, covering half at low of day, and then another half at measured move, which is like the very bottom of this thing. So I feel like this was a really clean trade management. Moving on to loser highlights. So this is CRWD. This is actually my biggest loss on the VWAP continuation, and we just kind of talked about this trade, so I'm not going to spend much time on it, but I took a loss, at a full stop on this VWAP continuation, re-entered it again, and then captured the full move. So I think that the interesting thing that it was a really good trade, and it was my biggest loss. It made my highlight winners as well as my highlight losers. So good trade, just didn't work out on the first attempt. Moving on to NVDA. So this was I felt like a really solid entry as well. It had a 3-bar break on the 2 minute, and I felt like this was very valid, and this was a nice trade, nice entry. But it's able to just get over VWAP and reclaim and kind of wick me out, which the best ones really should not do that. But you could see here it resolved very cleanly and had a really big meltdown at its opening range break area. So unfortunately I took a loss on this one, but being that this is one of my bigger losers, this is actually a really nice trade. So in summary, I reviewed every VWAP continuation I took on elevated risk, and there wasn't anything wrong with it. I just took a lot of smaller paper cuts, and trades didn't really work out, but the quality and my selectivity was really good. So I'm going to keep my risk at 20%, and I hopeful that I'm able to complete my VWAP continuation paper and my video that I am working on. Hopefully I should be able to finish that this month. I am traveling a lot and stuff through this month as well, so that's going to throw up some hiccups, but hopefully I'll be able to finish it. All right, moving on to Second Chance. So Second Chance is something I've been working on for a while now. This is the first month that I've been working on it. I guess putting a lot of risk behind it and placing a lot of emphasis, but it is developing into one of my core strategies. So getting into the details, you see that the largest gains are about 3 times of the largest loss. The MFE is about 2 times of MAE, and I have a profit factor of 2.72, and still only has an average of about 46% win rate. And there's within this Second Chance, there's a sort of a few variations that I take. So let's move on to those variations. So these are all the different tags that I have within the Second Chance. So I took 13 Second Chance in total. 7 of those are my main emphasis that I'm working on, which is the Second Chance off of the opening range break. So I did well in that category, which is my core strategy. The other thing that I did well, and I only took 2 of these, is a second chance off of higher time frames. So I'll go over at least one of those trades. So I'm going to dive into the winner highlights. Actually, the best highlight was the Apple higher time frame second chance idea that I had. So the market was really looking weak and selling off this day, and Apple was opening right at its was this like a 4-day consolidation level, and so it breaks through the this level that it had put in, and then it comes and retests and then fails. So this trade worked very well for me. I remember this being only like 0.7 RVOL or something like that, so it didn't have a lot of RVOL, but the trade really did work. And the thing is, like, this was a higher time frame idea, so I just think that on big higher time frame ideas, maybe I can risk the maybe 25% of my position towards break even. So my second one was CRWD. You can see that this has a pretty significant opening range break. It did get below and then kind of rebid and almost stopped me out here, but wasn't able to get above the 9 EMA and really starts to sell off. So after like reviewing this, I think that I should start managing these whenever we get like this just full-bodied candles, multiples of them. I just really wait for a turn in order to get out, so prior bar breaks on the 2-minute, and that would allow me to capture really the entirety of this move before I cover half of my position. But I still think I managed this really well, and it's just something that I want to start implementing, is just allowing it to move even further in my direction. Next winner is going to be NVDA. So this was a very clean opening range break. Tested it 3 times and almost sort of a bouncy ball pattern. So it breaks, does a brief retest, and then immediately goes and breaks low of day again. So this was super clean. My risk to reward is really high on it. And again, I feel like if I just give it prior bar breaks, then I'm going to be able to capture and get out of most of it almost on a rubber band type of scenario when it really starts melting. Next one is going to be CRWD. Again, it puts in a VWAP continuation in addition to a second chance off of the opening range break. I really like that this time I actually did exit half on the 2-bar break. And then I gave it, a good amount of room, and I actually exited this position, the final position, on the reclaim of the 9 EMA on the 5-minute instead of the normal 2-minute, which is something I started doing this month whenever I have like a higher time frame idea. So I want to continue doing that. In addition to, depending upon the catalyst and things like that, I might want to actually hold 25% to break even. But I really like my trade management on this trade. All right, now moving on to the loser highlights of the second chance. So you can see that the only thing I don't like here is for some reason I added twice, but it does actually make a very clean opening range break. I know Justin was in this trade as well, and it just kind of rebids and takes me out. But this was a really clean trade, and nothing wrong with this one. So in summary, I think that my second chance it's very clean strategy, and especially the opening range break. Second chance is something that I've really been working on and spending a lot of time with, and I think it's going really well. So I'm doing a risk bump of that specific strategy from 6% to 10%. And it's really becoming a core part of my strategy. And so I'll continue to work on them. I think probably after I finish my VWAP continuation paper and video, I will probably do a second chance That will be my next strategy that I focus on. So really placing an emphasis on second chances in general, with a large emphasis on the second chance off of the opening range break. Ideally, I want to get this strategy to 20%. So I think I'm making a lot of progress in doing that. Right now it's 10%, so it's a pretty big risk bump for me. And then maybe over the next couple months, I'll be able to go from 10% to 15%, and then 50% finally to 20%. Moving on to the opening range breaks. So I typically don't take opening range breaks. I don't really like them because I feel like they tend to be choppy and you have to be extremely selective on them, and I have not studied them nearly as much as I need to. And so what I've been doing is just taking the second chance off of the opening range break, which I feel like has a much higher probability of not getting chopped out and not taking heat and all those things. So that's how I'm getting involved in opening range breaks. However, having said that, I did take a few of them as traditional opening range breaks, and I did decently well on them. I think I want to continue placing an emphasis on them, but you see that my largest gain to loss was 2.5. Times the amount. I also had 2.5 MFE to MAE with a profit factor of 3.92. So overall, very solid. Just like I feel like there wasn't a lot of opportunities that I wanted to risk anything on. So yeah, let's just dive into the details. So diving into the winner highlights, I took my first one on Tesla, and this is actually a much better second chance off of the opening range break, and this just kind of proves why I take that strategy. And I feel like since I took the opening range break off of this one, I want to exit at like break even as it comes back. And so if I'm not involved in it at all and I just wait for the second chance, and then I have a nice entry with a really tight risk reward, and this is what really sells off the remainder of the day. So I feel like that extra pullback is really needed for for buyers or sellers to really start stepping in. But still, this was a clean opening range break on really good volume. But I just feel like the better opportunity is the second chance off of the opening range break. Next up is traditionally what you'd want to see for an opening range break. So you see a nice consolidation holding the 9 EMA and then just ripping through the highs on volume, and it doesn't put in a second chance. This is what I would kind of really hope for a lot of the second chances. A lot of the opening range breaks is that it kind of just goes and doesn't look back. Unfortunately, I think most of the opening range breaks I take do look back and they go and do a second chance before they really take off. But I think this was a really good entry here. So just took half as momentum was slowing down, exit off of the 9 EMA, and then completely exit the position on the 9 EMA on the 2-minute. Maybe I should have just exited at the loss of trend and the 9 EMA on the 1-minute, being that this was overextended and things like that, and I know people are looking to short it, but this was a really solid opening range break. I think this is probably the best example of an opening range break. Okay, moving on to the loser highlights. This was the opening range break as well, and I feel like this was a pretty solid opening range break. We had that volume that I always look for, and it gets back above those levels, go long, and it just immediately fails. So this is why one of the reasons why I don't like taking these trades. Perhaps it shouldn't have pulled back, and this is just choppy, but it looks pretty choppy. It is choppy. It wasn't very clean, and just failed. So I don't think it was a terrible entry, but yeah, I just don't like it. Yeah, I think in summary, still don't really like opening range breaks. I will take them on occasion. And ideally, I would be looking to maybe scale up my opening range break to 10% so I can take the initial like sort of momentum on the break and then looking to add on a second chance off of the opening range break. So I might look this as a pure just capture momentum. I could look for just to hold the whole amount. I don't know. It kind of depends, but something I'm still like basically trying to collect more data on. I can take them, but I'm just being very cautious when I do take opening range breaks. Okay, and finally, we have the 9 EMA pullback, which is a strategy that I have been sort of working on and off for a while. But this month I was trying to place more emphasis. I did decently well on the prior month. And so, yeah, I had 3 times the largest gain to losses, which is good. 2.5 MFE to MAE with a profit factor of 3.75, and most notably a 60% win rate. Now I only took 5 total trades, so not a lot of data, but would like to see if as I increase these number of trades that that 60% continues to hold up. That's a very strong win rate for me, especially when my average is more about like 42%. So yeah, I just felt like I was very selective on when I took these types of trades, and so far it's being fairly profitable. So moving on to the winner highlights. First of all, we had Tesla, which that first real week of July was crazy. I was out, but I did trade the next week, and it just sort of had continuation from the prior week. And so again, it's really strong off the open, and so I just look for a 9 EMA pullback, and so we do get that. And I actually added here twice, so I don't like that I added to this position. I want to get full size on the initial position, but you do get the exact volume profile that you want. So low volume pullback into the 9 EMA, starts to hold, and then big volume through the high of day again, and so just exited as it broke through, started to slow down. Then it breaks trend, starts to hold below the 9 EMA, and so I exit another half, and then it's just like struggling at this resistance area, and so you just exit the rest as it's not able to get above that. It did end up going, I think, considerably higher, but you see there was a big volume pop as it comes and sells and stuff, and it actually goes to the 9 EMA on the 2-minute. But overall, I felt like this was a very clean trade. Moving on to my next trade. So this was INTC, which I had as a second chance earlier. So this comes close. So it has an opening range break, comes close to the second chance, and then fails, but it's also on the 9 EMA. So this is like multi-strategy alignment where we have both the second chance off of the opening range break in addition to the 9 EMA pullback, which is holding. So able to capture a really big move here down into the prior higher day, which is crazy. And I mean, this was a really good move. I think I managed this extremely well. So very nice trade. And so for my loser highlights, so you see that this actually pulls back to the 9 EMA. I am able to enter as volume increases. We have that nice volume profile, which I think the volume profile is one of the more important aspects of this 9 EMA continuation trade. It had 3 bars of lower volume, and then holds the 9 EMA, and then a burst of volume again, and that's kind of what you want to see. And so we do get exactly what we want, but we do see that we have resistance at high of day, and so I just get out as it breaks trend. You can see I get out before that big candle comes and dumps through VWAP. So really, I think this exit was super clean, and I didn't take, that big of a loss on it. So I think, just managing my stops well in order to get out of trades that are starting to work but not really working, and then getting out before everyone else gets out can be a key part to this strategy. So I definitely need more data in the strategy, but so far it's working fairly well, and seems to work on extremely strong names, and also on multi-day runners like we saw this past month on Tesla, IWM, NVDA, just to name a few. So I need to be like really selective with this strategy and only use it when I see really strong momentum off of the open. And just as a side note, I have a lot of confidence in this 9 EMA pullback because this is what actually really stops me out most often in my rubber band strategies. And so often I will take a rubber band on a multi-bar break on a really strong or weak stock, and then it will pull back to the 9 EMA on both the 1 minute or the 2 minute, and it will just immediately rebid off of that 9 EMA. And when it does this, I know I'm in trouble if I'm in this rubber band. And the fact that I have gotten stopped out so many times due to this 9 EMA pullback on the rubber band is what's really giving me confidence to take the 9 EMA pullback instead of the rubber bands on these like really strong or weak names. So that's it for my monthly review. Please let me know in the comments if you do anything different in your own monthly reviews that you find helpful. And don't forget to like, comment, and subscribe. Thanks.